Dogecoin co-creator Jackson Palmer has just accused Elon Musk of lying. Let's look at what happened. So, Palmer said he knew Elon Musk would back out of his initial Twitter contract months ago. He then said, "The second I heard he was going to make a bid, I thought that he intended to destroy Twitter." On Friday, Musk said he's backing out of the $44 billion deal. In a letter, his lawyers accused the social media company of making false and misleading representations about the number of bots there are on its platform. In his interview, Palmer said he believes it was Musk's plan all along to sabotage Twitter from the inside. His comments came just days after Elon said he thinks that about 25% of users on the platform are bots and dissed Twitter CEO Parag Agrawal on social media with a poop emoji. Palmer then said, "He was sowing a huge amount of discord and distrust on the platform, and there are huge amounts of churn and attrition from staff. His play is to either dismantle all trust, or maybe he's delusional enough to think he can build an alternative. The other alternative is that he wants to drive it into the ground at a much lower price, and I think that's what he's doing." There's some more big news for Dogecoin, but before that, let's look at Bitcoin for a minute, since their price correlation is still very high. According to Glassnode, there were already signs from the market that Bitcoin could be in the latter part of its bear cycle. In a recent report, the analysts argued that long-term holders, those least likely to capitulate, were under remarkable pressure to sell. The report also said, "The present market structure has many hallmarks of the later stage of a bear market, where the highest conviction cohorts, the long-term holders and the miners, are under remarkable pressure to surrender." The volume of supply, a loss, has now reached 44.7%, of which a majority is carried by the long-term holder cohort. However, this remains at a less severe level compared to previous bear cycles. Also, the thing is that a pause in dollar strength would allow Bitcoin price action to stem losses. But with the July 13 Consumer Price Index print in focus, optimism around crypto on shorter timeframes was barely perceptible. Basically, I think we could see more pain for both Bitcoin and stocks. This is because there is a very small chance that we see a double correction towards 24K or 25K. Coming back to Glassnode, their report also talked about the long-term holder spent output profit ratio. It is a metric that tracks the average profit or loss of LTH coins being spent. If you don't know, LTH addresses are those holding coins for at least 155 days. So their report said that the LTH for this ratio is currently trading at 0.67, indicating the average LTH spending their coins is locking in a 33% loss. This just implies that there's some chance that there's still room left to drop if Bitcoin was to repeat previous bear market behavior. Also, the Shark Tank giant talked about the crash too. He said there's going to be total panic and massive volatility in the crypto markets ahead before the industry swings back towards stronger firms and clearer regulations. O'Leary said that we're still missing a real big event seen in previous market cycles before we go back to accelerated growth in the space. He said, "This passion play gets played out over and over again." Now, people are blaming the current market conditions as a result of over-leveraged centralized finance firms such as Voyager and Celsius. O'Leary said the problems with firms like those come from idiot managers who needed to be weeded out to make the industry more viable. He believes that this second wave of crypto crises will have regulators focusing on crypto-earned products like those from Voyager Digital. He also said, "It's unfortunate that these companies have gone to zero, but you end up with much stronger species." Moving on, there's another important piece of data we need to look at. The supply last active more than 1 year ago usually falls sharply prior to the market reaching a local high, and then it often bottoms out during the beginning of bear markets and finally begins to increase right after that. At the beginning of June, supply last active more than 1 year ago reached a new all-time high of 65.72%. Previously, values close to 60% meant that a bottom had already been reached. What this means is that 65% of the supply has not moved since July 2021, when the price was at 35K. Also, if we look at the 2015 and 2019 bottoms, there's something really interesting going on. In 2015, the bottom was reached at a value of 53.4%, while the first higher low was made at 59.4%. In 2019, the bottom was reached at 50%, while the first higher low at 58.6%. So the current reading of 65% is not very similar to those of 2015 and 2019. So it is likely that we're in a bear market, but we can't be sure if the bottom has been reached because of the unusual reading relative to previous cycles. Also, a new study finds that many Wall Street investors believe Bitcoin hasn't bottomed out and will fall to nearly half its current value. So this survey asked 950 Wall Street investors whether they expected Bitcoin to first recapture the 30K level or fall to 10K, with 60% saying they agreed with the bearish scenario. The poll ran from July 5th to 8th, during which time Bitcoin ranged from a low of 19.4K up to as high as 22.1K. Among professionals, 26% believe cryptos are the future compared to 23% on the retail side, and 24% of retail respondents think digital assets are all garbage versus just 18% of the pros having such a bleak opinion. Regarding the overall bearish sentiment, Bloomberg said, "The crypto industry has been rocked by troubled lenders, collapsed currencies, and an end to the easy money policies of the pandemic that fueled a speculative frenzy in financial markets." But still, Bloomberg said that those surveyed do believe Bitcoin or Ethereum could survive in the long term. They said, "A majority of respondents anticipate that one of those two will remain a driving force in 5 years, even while a significant share sees central bank digital currencies taking on a key role." So in short, these retail investors are way more pessimistic about the market than the pros in the market. As I've been saying, the FUD in the market is going to wipe out a lot of retail investors and only the diamond hands will be left. And that'll be great news for the remaining people in the long term. If we look at the crypto market fear and greed and index, it stands at 15. Now that might come as a bit of a concern to a lot of people because in the past 3 months, this index hasn't gone above 30 even once. Basically, the retail investors have been afraid since mid-April, and we need to wait a bit longer before we see this figure rise again. And this just means that a lot of people are waiting on the sidelines for some big news for Dogecoin and Bitcoin. Also, Dogecoin co-founder Jackson Palmer took to Twitter to share his disapproval of bankrupt crypto lender Celsius Network. He said, "Mind-boggling that even though they've filed for bankruptcy, you can still click Get Started on the Celsius website and they'll advertise you the 17% APY on the registration page." And I think that's absolutely true. If you don't know what happened with Celsius, I'll create an in-depth video about it very soon, where I'll talk about exactly what happened and how it'll affect Dogecoin and crypto in the coming weeks. Talking about Dogecoin, it says here that Dogecoin and stablecoin DAI are gradually catching up in the market cap rankings for cryptos. It says that Dogecoin maintains its position as the 10th largest crypto with a market worth of $8.16 billion, while DI ranks 11th with a market valuation of $6.92 billion. Now, the thing about these articles is that they're trying to spread FUD in the market by saying that Dogecoin will be dethroned or that Dogecoin is drying. But that is really far from the truth. Now let's look at the reasons why Bitcoin and Dogecoin survived the inflation sell-off. Everyone thought that we were going down to 12K after the inflation report came out. But that is not what happened. Doge and Bitcoin are pretty much where they were before this report came out. The main reason behind the lack of downward volatility in Bitcoin is the fact that the market had already priced the scenario at which CPI inflation data would be higher than the industry's consensus on it. Historically, the major cryptos always had a tendency to move irrationally relative to events happening around the industry. They are mostly tied to the fact that traders and investors act before something that they expect to happen happens. By acting in advance, they leveled the potential outcome of the unexpectedly high inflation data, which negatively affects the cryptocurrency market in general. In contrast to the previous CPI data release, the market was more than ready to take a hit. Also, we have to talk about how some altcoins performed. The altcoin market showed almost no movement at all as the average volatility of assets like Ethereum and Cardano stayed around 3%, which is significantly lower compared to the same period 1 year ago. But the big winner was the Matic token, which rallied by 25% after Polygon announced joining the Disney Accelerator program. Coming back to Dogecoin, it's still trading at around 6 cents. What's shocking is how the cryptos were barely affected by Biden's move the day before yesterday. Let's see how it goes this week, and I'd love to know what you think will happen. Leave a comment below.